How does it work as far as finally uplisting on a big board exchange? Like, what are the timelines and stuff like that that will happen? Let's say if Safe Banking were to pass, for example, in September. Hey everyone, welcome to this TDR Cannabis Exclusive. It's earnings season and a lot of information being basically delivered to you right now. What companies are moving, what companies are not, what companies to look for. Well, as we have more and more of these podcasts this week, we want to bring in a familiar face to obviously our network here. Susan Villare, she's the CFO of MariMed. Good to see you. You reported your earnings this week. How are things?
Very good. It was a great day yesterday, and it wasn't pouring rain like last time we saw you in Benzinga, driving around in an SUV singing. I did not sing, but yeah, the sun was bright, and the earnings were great and well received by our analysts and investors. So it was a great.
Yeah, that was what, 3-4 weeks ago, and I've asked everybody since then, like, did you have a big umbrella? And some of the rain that poured down, I think a lot of people thought I was wrong when I said there was 30 inches of rain in just 3 days, and here we were. I flew out of Detroit, but I had a layover in Boston. And when I left Boston, it was sunny and 75 degrees. And I heard it got into the 80s in Boston during that week. So clearly we made the wrong choice going down south that week, right?
I know. I flew in and I got home and I was like, oh, I don't need my umbrella anymore. And it's 80 degrees here. It was
Isn't
shocking.
that crazy?
Exactly.
Yeah. So,
yeah.
But anyways, good time of the year as we are now entering into earnings season. So let's dive into it. Let's first begin with your latest earnings, Q1. Your CEO, John Levine, describing the latest earnings as a solid quarter, stating that the company reported your 13th consecutive quarter of positive EBITDA, or positive adjusted EBITDA, along with you outlining that your first quarter was very strong and are maintaining guidance of $150 million for 2023. Can you outline as to why you're keeping with guidance for our investors better to understand?
Sure, absolutely. So, yeah, this past quarter, we were delighted. We had revenue of $34.4 million. That compared sequentially to a year ago of $31.3 million at 10% growth. Wholesale grew 71% year over year, which is fantastic. And each quarter, we're like, oh, it's the high water mark. This was the third quarter in a row that it grew, and our new high water mark. And retail was up 8% year over year. Revenue is down modestly, but in line with what we had predicted due to normal seasonality. Q4 is a big holiday. We had a lot of promos. And then we were very pleased with gross margins. So we're laser focused on getting back up to, 50%. So we were thrilled to see that margins were up 100 basis points, and we reported 46%. And then the adjusted EBITDA, John went on that journey of his number 13 soccer player number. Then I guess he had it in rugby. Yeah. So he was like 13. So 13 quarters in a row of positive adjusted EBITDA is pretty fabulous.
Stands out, especially in this day and age with this industry, right?
Oh, absolutely. And then we were thrilled with the balance sheet. So many are aware we did close a credit facility this past quarter and raised $30 million. And we were able to pay off $5 million on our Kind Sellers Note, which was a sale operation. Yep. And we still ended the quarter with $21.6 million of cash. And that included, we paid off all of our taxes for last year, which many don't do. That was about $5.3 million. And we paid another $1 million for interest. So very, very strong balance sheet. And, everyone is delighted for the assets coming online. And we were thrilled that Quincy finally closed, Vermont, they were calling it, on March 10th. So that is notable. And we are going this week to get our adult use and put that in place. So very exciting quarter.
So I'd be curious to know what institutions and analysts are saying, because on the retail side, the feedback that I receive is the transparency they like about the company, the strategic business decisions on entering states with limited licenses is really starting to pay huge dividends and more attention. Do you get that same feedback from some of the people that you're speaking with based on the overall business strategy?
Yeah, I mean, we had a ton of folks come to us on states that we're not keenly interested in. They're fabulous states, but not ones for MariMed. So we've been very focused. We're in 6 states right now, and they're all limited licensed state, with the exception of Missouri, which has unlimited for dispensary, which is why we elected to go into wholesale there. So the states we've picked all but, one is basically adult use passing or has passed, which is really fabulous.
71% increase in wholesale. What's the reasoning behind that? That's a huge number.
Yeah, I mean, again, we had Kind Therapeutics, which the company had managed, and so we acquired it, and in its day, it was pretty high. They had high dose, and they had lost that status with a change of the rules, and so even without that, it was just tremendous growth. We outfitted the entire sales force. We have 1-to-1 ratio of the brand ambassadors with the sales reps. We have great coverage. There's about 100 and plus dispensaries. We pretty much sell to all of them. And then we were delighted that we got GMP certification. And this week we started selling high dose edibles, which we hadn't done,
Right.
probably in four years. So that's going to be a positive lift for us right now.
So all in all, this is solid performance, as you and John have said. Gross margins, as you said, year over year did increase. It was a tough retail environment because let's face it, the whole entire space has been hit hard. But what would you say here in Q1 were some of the hurdles that you had to overcome?
Yeah, I mean, we did see a couple of dispensaries opening. We did pick very good locations. So in Massachusetts, we now have 3 dispensaries. When we started the quarter, we had 1 operational. So as I
Hmm.
said, Quincy opened March 10th and Beverly was April 25th. So you can go from the North Shore to Boston to the South Shore. And we have really a great variety of products that we offer. So it's not just MariMed products. We pick the best brands. We have really great education program for our bud tenders. So when people come in, they feel like they're really getting good service and value. And then we just recently launched delivery in Massachusetts. So we're going to have all 3 stores delivering pretty much all around the surrounding towns, which nobody's really doing. So we did
Yeah.
take a interest in that. And then in Illinois, where we have 4 dispensaries, we're kind of on the southern states there. And so we did have a little bit of one of our smaller stores, Anna. We were projecting that they are, going to Missouri where the state taxes are about 7%. They're a little bit
Yeah.
higher in Illinois, but the other 3, continue to perform solidly. And we're excited. Casey's moving along to be our 5th dispensary in the state.
What would you say heading into Q2 is, I guess, the biggest thing that you're most excited about and where you see potentially the biggest growth opportunity?
Yeah, I mean, it's tremendous amount of growth that we're doing. So we had 8 facilities that are going operational. So 2 just occurred, and we had news that the Ohio dispensary just got a positive review by the CCC. So that
Yeah.
is going to be opening in the next few weeks. We're on track with Illinois to, be doing our wholesale business there. So the elevators came in, the air conditioners, all that
Yeah.
good stuff. So we're starting to ramp to hire those folks. And, Missouri is another place where we have that we're going to be doing all of our edibles and vapes. So that is on track. So we're delighted that all of the projects we have in flight are moving along and staying focused. We did hire some folks to help with those. And so just everywhere we look, we're in great markets. And
Hmm.
Maryland,
Hmm.
we're doing triple shifts now to get ready for adult use, which we believe will be July 1st.
July 1st, really?
Yeah, so we're around the clock now producing and stockpiling inventory to keep up with the demand. And we're selling
Hmm.
it in flower even with just medical right now.
Wow.
Yeah, so it's real good stuff.
You mentioned earlier why you're keeping your guidance intact for the year, and although you battled industry-wide headwinds, and let's face it, as I said, the whole industry has, thus is affecting revenue growth for many. But you are maintaining full year 2023 revenue and adjusted EBITDA guidance. So based off of that, I asked this question: like, should investors view the sequential revenue decline as remnants of, like, say, weak pricing and consumer spending, which seems to be part of the landscape right now?
No, I mean, I think on retail, we're being very cautiously optimistic, but we do have, 4 dispensaries coming online. So that will help offset anything there, coupled with the deliveries. So we have a really great marketing team that has all sorts of programs. We have, a rewards program that keeps our customers loyal. So they enjoy, and we had folks that go to Panacea and Middleborough coming up to Beverly for the big grand opening for 3 days. So overall, we watch what the competitors are doing and kind of do better.
Well, I know a lot of people say that, but feedback that I'm receiving within the industry, and I've said, like, with you and John in Miami and some of the discussions that we had, and understanding that John not only being CEO of a company, but a rich history in real estate, and that's obviously been a big pillar as far as making smart business decisions in key areas and key states. It's in an industry that's had some challenging times, and I would best describe that Benzinga conference as somber. But I will say that there's been a lot of conversation around people re-strategizing their investment strategy versus going with the large 3 to 4 MSOs and not focusing so much on market share anymore. It's all about positive cash flow right now. I assume that that's some of the feedback that you're receiving, the narrative that you're pushing out with analysts that you're speaking with.
Yeah, I mean, we eye on the prize. Cash is positive, and
Yeah,
we're projecting the fourth year in a row for positive cash flow from operations. I think you could count on one hand how many MSOs have that. So we are, obviously very cautious with spending as facilities are opening. We want to be on top of it, but we're not over hiring 6 months in advance. So
right.
we're very keenly focused on the bottom line, as well as being very frugal with our cash.
Have you looked at or you had any internal discussions with the executive team as to how it's like kind of referencing what I said before about how people are kind of resetting for those still interested in investing in the cannabis industry, that they're pressing reset and looking at more specific companies, as I said before, about pure business fundamentals, how that's going to be probably a major shift within the industry, especially if safe banking gets potentially passed within, who knows what the timeline is on that. But I feel like we've kind of turned the corner as far as how investors are approaching this industry as a whole. And I'm curious to see if your executive team has actually had any internal discussions based off of that and potentially what the true opportunity lies ahead for you.
Yeah, I mean, I think we met a bunch of different investors that we wouldn't normally have met when we were down
Yeah,
in Benzinga. And after this call, our phones have been lighting up because there's very few
really
that are kind of doing what we're doing. So we do have Water Towers just launched coverage on us. So
saw
that
that.
was
Yeah.
exciting. So they have a bunch of investors that, are looking at core fundamentals. They want to have a clean balance sheet, cash flow positive, a seasoned management team, and just fiscally responsible. So, I think MariMed fits right in that box for folks.
Yeah. We look at some of the acquisitions that you made in the past quarter, and most notably the closing of Ermont. That's where you obtained a vertical cannabis operation in Quincy, Massachusetts, and rebranded the retail operation, as you said before, the Panacea Wellness Dispensary. So just a quick update. How's the integration of those assets going, and when you expect them to be accretive to company earnings once fully integrated?
Yeah, I mean, I think pretty much this quarter they should be accretive. We're pretty lean there. It's a medical dispensary at this point. There was about 17 employees, pretty much all stayed on. And we're focused on the medical dispensary. As I said, we are applying to get our adult use, and right behind, we're going to triple the size of the dispensary. And I think we're going for drive-through as well. So at this point, John's very good. He's from real estate. He negotiated hard
Yeah.
with the
Yeah.
landlord. So as it stands now, I think we can be right out of the gate next quarter, probably by Q3 for sure, cash flow positive from that business. And so once adult use comes in, there is no adult use in the town of Quincy, which is amazing.
Yeah.
So we'll be, I think, really in good shape with that acquisition.
So all in all, the biggest takeaway from this latest earnings, if you're an investor learning more about this industry, or for that matter, people that are very well versed within this industry, what's the big takeaway that they should get from this latest earnings report?
I think, we forecast that we're going to have continued positive growth in our revenue with all these assets coming online, increasing bottom line as well as gross margins, and very, fiscally responsible with our OPEX, that we're not overspending ahead of the revenue growth.
Well said. Last thing I'll ask you, and I know that you don't design your business around this, but we got to ask that lovely question pertaining to safe banking. Getting bipartisan support, and we're going to actually have a hearing later this week regarding it. This is actually being rushed, and some people I've spoken to said, and I don't want people to misinterpret this, but I've spoken to some pretty influential people out of New York that say it's for real this time. Whether that happens or not, and I know I see a grin on your face because we've been told that a few times before, but if miraculously safe banking were to pass, talk or walk me through how you stem to benefit, like how fast you can benefit off of something like that, meaning like how does it work as far as finally uplisting on a big board exchange? Like what are the timelines and stuff like that that will happen, let's say if safe banking were to pass, for example, in September?
Yeah, I mean, I think the biggest thing for us is we do have great banks that we're working with, and we have some new banks that we're looking to consolidate that we've not announced yet. But we have, very good banking relationships. We're able to get mortgages on our properties. So in that front of, day-to-day operations, not much of a change for MariMed. But the big thing would really be coming off the OTC and going on the NASDAQ or the New York
Yeah.
Stock Exchange. Most companies I've worked at have been on the NASDAQ. So we'd be delighted to do that. When I started in think it was April, we went very quickly to get on the
Yeah.
Canadian Stock Exchange. So it would be great to be on both. So that would be the biggest thing for us. So I'd love to, be able to use old partners from the big four to do the audit.
Yeah.
And I would love to, really have some of the banking relationships I've had in prior lives that we can, utilize.
Probably make your life a little easier too,
It
right?
certainly would. All the folks that they're like, we're waiting, Susan. So they continue to call me and stay in touch, waiting for it as well. So it'd be great for them as well as for us.
That's the key, is we're waiting, and it's
Right.
only a matter of time, which is the sentiment. And I know, man, oh man, if when it does happen, it's going to feel like it's surreal. But
Let's hope. Yeah.
fingers crossed. Anyways, congrats
Great.
on the latest quarter. I know tough economic conditions, but a strong quarter weathering through the storm. But most importantly, a good strategy in play for the rest of the year and keeping guidance intact, which is going to be big for investors to keep their confidence in what you're doing moving forward. But appreciate the update. Tell
All
the team
right.
I say hi and let them know I'm looking forward to some good old New England clam chowder in a couple of weeks, and I come out to Boston and do some filming. We got to
Perfect.
do some of that.
All right. We look forward to having you here in Boston for sure. Thank you so much. I appreciate
Thanks,
your time
Susan.
as
Take
always.
care.
All right. Have a good one.
Hey everyone, thanks for watching. And if you want to learn more about the emerging industries that we cover, then leave a comment below and let us know who you want us to interview, the questions you want asked, and the information that you want to learn. We want to hear from you. As usual, click on that bell for all notifications to get the latest information. Share this video with your network, and don't forget to subscribe to our channel because we would not be here without you. Thanks for watching, everyone.